Our next guest believes that the S&P will reach 6,300 before the end of the year, but he also believes that we may be about to enter what he refers to as a zone of hesitation in the coming weeks. Tom Lee, the Chief Investment Officer of Fundstrat Capital and a CNBC contributor, is now joining us. Tom, it's nice to see you. At some time, I would want to discuss bonds and the 10-year, but for now, you have 4 reasons to believe that the S&P will continue to rise in December and may reach 6,300 by the end of the year. Which 4 factors are involved? Seasonality is one of them. Historically, December has been a good month, but in an election year, when you're up over 10% in the first half, December has been up 100% of the time. The second is that yields have dropped to what they were before the election. The 10-year is at 4.1%, For multiple expansion, that is advantageous. The third is that, despite the market's recent rally, sentiment has actually shifted negatively, which I believe has been unexpected. That seems like a contrarian bullish indication to me. Lastly, there are still those 2 puts, the Fed put and the Trump put. That suggests that you still wish to purchase any of these dips, in my opinion. What steps can Trump take to ensure that the market continues to rise? I believe that his strong pro-business stance has been demonstrated by the cabinet nominations and recommendations he has made. Additionally, I believe that Trump is heavily focused on the stock market, as many have stated. Communication, in my opinion, is still a tactic and serves as a reminder that animal spirits may reappear. The way the financial media sector covers tariffs is something I'm not sure you follow, to put it politely. How, after all, can you call them pro-business when he supports tariffs, according to these people? Because if you watch the coverage of tariffs, you might just think, yes, it serves as a reminder to me that it's wise to have a large stick with you. Tariffs, in my opinion, have also worked well as a negotiation tactic. I believe that other nations have taken some preemptive measures. Furthermore, I don't believe the incoming White House intends to implement any policies that will negatively impact business profits in general. Therefore, I believe that whatever is done in the end will be beneficial to company. Okay, I hope you're all paying attention. That's the view of one individual anyway. Every time we discuss the 10-year, the response is, well, it'd be good this way, but it would be bad that way. Why isn't it a sign that the economy may not be as robust as we initially believed, and that corporate profits may not be sustainable if it is declining, which is advantageous for multiple expansion? On the one hand, there is the multiple expansion, but occasionally it is accompanied by a slowdown in the growth of profits. Although it's always difficult to determine what the bond market is saying us, it is a possibility. Having the 10-year stay at these levels or even decline is actually an easing of financial conditions when I look at the next 6 to 12 months, and we know the Fed wants to lower the cost of capital for small business owners and homeowners with mortgages. That's encouraging to me. Do you believe that Vivek Ramaswamy and Elon Musk can actually make progress with this? Additionally, would that have a favorable or negative impact on economic growth? Because, well, you're cutting back on spending and laying off people. Well, I think it's fantastic that someone is looking closely at things. According to Bernie Sanders, it was fantastic. Indeed, it is correct. Additionally, these are enormous. That's not good. No. Excellent. Apologies. Since these are really expensive things, I would really like to see someone pinpoint any areas where there might be waste. Is that detrimental to the economy? I believe that the majority of people consider government expenditure to be the least effective use of capital. Therefore, I would rather that the private sector reinvest that money if government spending is cut, and it has been displacing private sector investment. That would, in my opinion, be really important overall. The game is zero-sum. Many people would use any available funds, whether from the government or other sources, to boost the economy. Yes, I believe that if the government doesn't spend it, it will move into private hands. That's correct, indeed. That would, in my opinion, free up funds because, as you may know, government spending on capital is in competition with private sector funding. The private sector investing this money at a higher rate of return is what I would want. Therefore, I believe it would benefit GDP, profits, and stocks overall. Do you want to? Before we release you, we all want to hear your thoughts on Bitcoin. Usually, it became stuck below 100. That's pretty. I suppose it's on a psychological level. Yes, I believe that some of this may be the case. Many people do not desire Bitcoin worth more than $100,000. And because there isn't much Bitcoin accessible over the counter, part of it might be the exchanges themselves. There is a lack of supplies, and I believe there would be a fierce chase if Bitcoin rose above $100,000. Therefore, I am optimistic that Bitcoin will conclude significantly higher before the year ends. Before the end of the year, prior to the end of the year. Yes, so before the year ends, break $100,000? Yes, well over $100,000 before the end of the year. Only a matter of time will pass. The date is December 2. Tom, it won't take that long, therefore it will be finished in the upcoming 4 weeks. Tom takes audacious short-term decisions. I am aware. However, you're crazy, and they all come true. Most of them do. A role, you know. Okay, thank you, Tom Lee. Okay, let's welcome Jeremy Siegel for further market analysis during this year's last trading month. He is an emeritus professor of finance at the Wharton School of Business, University of Pennsylvania. He is also Wisdom Tree's chief economist. Jeremy, you may have heard that conversation, but I'm not sure. I'll presume that you did. Just based on what the market knows, what the market expects, and what we should expect from policy in the incoming Trump administration. How would you weigh in on this? Yes, Becky, good morning. I am aware that Joe has been inquiring about the 10-year status. As you recall, the 10-year actually surged by over 20 basis points on Election Day. That, in my opinion, was a warning to Trump to be cautious of all the tax cuts. The market will undoubtedly accept an extension of the 2017 tax cuts, in my opinion. But keep in mind that Trump made many more promises. As you mentioned, Becky, things really started to improve when Scott Bessent was essentially nominated to be the Secretary of Treasury, due to his reputation for taking a moderate approach to the debt. I do not believe that the deficit is a short-term issue. However, I believe that the bond market would be under pressure if Trump fulfills all of his tax cut pledges. And I believe that relieving that strain began with Scott's nomination, probably also realizing that the market's response is important to incoming President Trump, who utilizes it as a type of report card or benchmark. Of course, President Trump is the most active user of the stock market of any president. Additionally, I would like to address Trump's recent tweet, if you will, regarding 100% tariffs on the BRICS nations in the event that they introduce a new currency. That particularly intrigues me since I believe that Bitcoin, which Trump is a strong advocate of, poses the greatest challenge to the dollar's status as a reserve currency. Telling them to don't produce an alternative reserve currency seems a little odd, but in reality, Bitcoin is being discussed as a potential alternative currency by many nations worldwide, with some of them switching from gold to Bitcoin. So, after we hear all the information, I'm a little interested to see how that will unfold. What are you anticipating, Jeremy? What do you anticipate happening? Do you think that because he will be concerned about how the stock market responds to this, some of his positions will be moderated, and as a result, you have an optimistic outlook on stocks? Yes, I am certain. I am aware that Tom, whom I greatly admire, believes that this month will see an additional 5%. I wonder whether his election caused us to move forward with the nice December in November. Therefore, reaching 6,300 might be a little more difficult. After that, I believe Tom anticipates a pause. Although our valuations are high, they are not exceptional. Please let me know if you require any other help.